morning, everybody. Happy Monday. It's April 6th, 2026, 8:45 this morning. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. We bring these to you every Monday and Thursday morning. And here we are back together again after a nice long weekend. Friday, of course, equity markets were closed. We had the jobs report that came out in the morning on Friday, but the equity markets, other than the futures market, did not react yet to that jobs report. Overnight, we did have markets selling off when the futures opened up on Sunday evening quite sharply, but it hit the lows of the evening and have been rallying ever since. And we're up about 10, 11 handles in the S&P 500. You can see that there. NASDAQ up about 109 handles, 109 points. Dow Industrial is about flat right now, so we'll see what happens. And you can see here the activity from last night after the markets opened up from a long weekend. We hit the lows roughly at about 65, 66 on the futures, 65, 66, 67, and rallied up sharply in the first couple of hours, and then kind of been floating sideways since then. So what's changed? Not a whole heck of a lot has changed on the Iran war front. I think the markets kind of rallied because I did see some potential negotiators, mediators stepping in, trying to put a deal together between the United States and Iran. But as we know, as we've experienced here for the past month or so since this conflict began, we can't really rely on information to make decisions and choices as it relates to trading. Now, we all may have opinions about what's going on and whether it's right or whether it's wrong. And as traders and investors, those opinions are really useless for us. We can't really rely on this sort of opinions and viewpoints to make trading decisions. We have to rely on what's happening in the markets. What is the market telling us to do? Right? The market will do plenty of problem solving when it comes to interpreting these events, and we just have to follow the tea leaves and go where the market tells us we should go, right? Whether if the market says no, the market's going down, well, we're gonna find opportunities to play the downside. If the market says no, we're going up, we're gonna find opportunities to play to the upside. Right now, I think it's a very, very difficult environment to trade in right now. I've been doing very little. As most people have seen in the chat room from me and in the service, we're doing very little right now because I think that this is a time where if you do too much, if you try to push too hard, you're going to get squashed. You're gonna regret what you're doing, and you're gonna be behind, and it's gonna be much more difficult to make up ground when you get behind. Right? We don't remember something. There's a sort of rule of thumb out there. You don't have to trade every single day. You don't have to trade every single market. You don't have to trade every single instrument. You don't have to trade every single stock. You don't have to be in there doing stuff all the time. There's going to be opportunities for you to strike. Much like I've been playing poker for years and years and years, Hold'em poker, and if anybody has ever played Hold'em poker, then you understand that you don't play every single hand. You don't play deuce seven all the time. You don't play three jack. You wait for the good cards to come in, and then you press when you have the opportunity, and then when things improve for you, then you press even harder, right? So there was an amateur who won, Robert Marconi, who won the World Series of Poker some many years ago, probably 24 years ago, and said that they were asking him questions about poker and what he thought about it, and he goes, I don't play every single hand because poker is hours and hours of boredom and moments of sheer terror. What does that mean? It means he's throwing away a lot of hands. He's throwing away a lot of cards. But when the moment comes where where it's the spotlight on those particular hands, particular cards, then he gets really focused and excited and energized when the adrenaline starts to flow. Well, it's no different with trading, right? So if you look at situations and you pass on them for a reason, because the combination's not good, the strikes are too far away, the premium is too high, um, the volatility in the market is too high right now, and it makes you pay up for options. All the same sort of factors come into play, and you make a decision and say, look, I'm just not going to step in there and play right now. It's just not ideal for me. Well, those are the same kind of sort of decisions he was talking about with poker, right? You wait for the conditions to be solid for you, not perfect, but just solid for you to put a trade on, and then you take your shot. So um, we'll see where things end up this week. There's not a whole heck of a lot of earnings coming out this week. No data, economic data today. Is a little bit later on this week. I believe the PCE number is coming out later on this week. We'll also have some ISM and PMI data, consumer sentiment numbers, and I think a little bit of housing data coming in as well too. On the earnings front, we'll have earnings from Delta tomorrow on Wednesday morning, before the open. Levi's tomorrow night. Nothing today. Constellation Brands later on in the week, and also WD-40. So it's a very light schedule for earnings. So I want to show you a couple of charts. Now, last week, we didn't talk about the monthly chart. We always like to talk at the beginning of the month about the monthly chart of the S&P 500 or the other indices. So let's take a look at a couple of these things. Remember, my rule of thumb is if we have a crossover of the black line from the red line on the MACD, and you can see that's right over here. I'm showing you the Dow Industrials here right now. Black line crosses over, and then we get a confirmation the following bar or the following month, right? That means we're in a bear market. Now, I don't care what anybody says. I'm just giving you the statistics as I see them and the conditions that I see at present. And if that's the case, then we're in a bear market, and we have to do what? We have to dust off the bear market playbook and start using that one. Now, of course, things can change, and like they did back here in 2020, 2021, we had a bear market condition for about 4 to 6 months, and then we turned right back up again. Again here in 2018 for about a couple of months, and we turned back down, we turned up, turned back down again in 2018, 19, even though the markets did go up during that negative condition in the Dow Industrial. So looking at the S&P 500, well, first of all, let's go back to this Dow Industrials, right? So we had a negative month in March. We're starting off negative in April. First crossover happened in March, though. So if we have a down month in April, it looks like we're heading into a bear market condition. Now, again, I don't care what anybody else is telling you. I'm just giving you what's been working for me, and how I'm going to approach the markets until that condition changes. It would take another 2 months or another 2 bars to change that condition from bearish to bullish. So that makes April a very, very critical month. If we turn right back up again, then it was a false signal from March, and maybe it was just a modest corrective period, and now we're turning right back up again. But we would have to wait until April 30th until we can make that decision and make that determination, right? So so that's that. Let's look at the S&P 500 in isolation here about on this monthly chart. So same situation here, right? Same situation as the Dow Industrials. We had elevated volatility in the month of March and a down month. And obviously the markets got saved on quite a bit on the last day of the week, last day of the month, which was last Tuesday. Markets were sharply. So we have this doji pattern. So I would say that the low from March is also an important consideration here. And we're going to say the low of the March was 63.16. You can see that right there, right? 63.16 was the low printed in late March. The high of 69.01, right near all-time highs. All-time highs, of course, were just over 7,000, printed in January. So we're well off those highs, about a good 3.5%, 4% off the highs from on the SP 500 from roughly 7,000. So what do we got to do? Again, we have to see the print at the end of the month of April. Doesn't mean there's not any trades to be made between now and then. There are, but for us to flip the playbook from bull market to bear market, we've got to see another negative print in April. I'm not looking for it. I'm just saying that if we get a negative month of April, that's going to shift our gears from bull market to bear market, right? And getting out that bear market playbook. And I've written about that, and there's an ebook out there about bear market playbook. We'll talk about that as we get closer to the end of April. All right, and let's take a look at bonds here. TLT. Some of you like to trade the TLT. This is the 20-year Treasury bond ETF. Has been very weak for the past several months. Certainly the last month or so. March, we saw when this ETF is weak, that means yields are going up, right? We know that price moves in opposite direction of yield, and so yield is going up. That means prices are going down. So we had a lot of selling going on in bonds in the month of March. We hit a high of 90 over here. We hit a low of about 85 over here. So yields went up quite sharply. And you can see that, of course, in if we take a look at the 10-year yield, the TNX, you can see this one went from about 3.9 all up to 4.48, almost to 4.5%. And you know, we're floating around this 4.3 to 4.35 level on the 10-year. Also want to take a look at the 2s and 10 spread. I always like to look at that one. If you guys take a look at that, that would be the where is it down over here? 2-year Treasury. Yeah. There we go. Yield curve. Okay. So you can see here that the spread had been pretty wide back in early February, which is kind of bullish for markets. And as we started to come down, it means the spread has started to narrow. So if the spread on the 10 and the 2s was here before, now it's starting to narrow, and we're getting a little bit closer to each other. So you know, when the yield spreads start to narrow, and we see this condition occurring, it is negative for markets, for equity markets. Let's take a look at the VIX here for a minute. The volatility index, of course, had a big spike up in early March and came back down. And so it's trying to come down and create a downtrend, but we were still above this 200-day moving average, which is at 18. It just broke below the 20-day moving average last week with some positive news, potentially positive news. But I wouldn't really make too much of it. The VIX is back up this morning. It's up to 25.08. The VIX futures up as well too. So people are still buying insurance. This is a troubling spot for the bulls here. We have a trending VIX right here, right? We don't normally have a VIX trending for so long. Since the end of 2026 has been trending upwards, right? Higher highs, higher lows. This is an uptrend, no question about it. We normally have big spikes up here and come right back down again. We tried to have that over here, but it was the bid on volatility was quite persistent, which means that people were still buying protection. People are still buying puts. So you have to respect the fact that that there's some people in there who are doing some active selling of positions. They're buying protection. They're buying puts. They're shorting stocks. They're shorting indices, and you have to respect that in this market right now, which is why it's making it so difficult to trade. There's some stocks that have been doing extremely well in this market. Like I'm looking at SanDisk, I'm looking at Seagate and Western Digital and Micron for the most part. Some of these names have been doing very, very well. Even Dell, but there's quite a few others in some other groups that are doing very poorly, and even some of the names in the technology group have been performing very poorly. I know Google had a big week last week, but look at the overall chart. This thing has been it's been a mess, right? from 350 all the way down to 275. Is that enough of a correction? That's about 20%. I don't know. Is that enough of a? I mean, not 20%, 15%. We had 3 up days after a very, very miserable 2 months from the beginning of February following earnings. So everybody loves everybody loves to play Nvidia over here. So Nvidia, had a really great earnings report, but it had not fired from there. Now, obviously, a very over-owned company here, well-loved company over here. But look at the chart. The chart looks terrible, right? I mean, where's your buying opportunity, or where's your buy signal? We're just going choppy, sideways motion over here. And if you buy something and for a couple of days, you're gonna have to sell it right away and take a smaller profit. Which leads me to another point here. In this particular environment, if you're not quick on the trigger to take quick profits, you're going to get smashed, right? You're going to feel like you're on a treadmill, going nowhere. And I think that that's important to understand, that in this particular environment, that taking 20, 30% profits when you would normally be making 50 or 60% profits is better. It's okay to do that. It's okay to step back a little bit and take smaller profits off the board, even 10, 15, 20% if you're going to play in this environment. That's not my particular style. But if that's what the market is going to give me and I want to participate in trading, then I have to understand that that is what I'm going to take. All right. You also have to understand that that is the limit for you in terms of profitability, right? The market is going to tell you how much you're going to make. And if you try to force the trades in there and say, look, I don't care what the market's going to say or wants to do, I'm going to get a 70% gain on this thing come hell or high water. That's just not going to happen. You're going to get killed and you're going to lose money every single time you try to do that. So if you can change your tactics, you can change your style and the way you do things in terms of managing risk a little bit, in terms of tweaking your style a little bit, I think you're going to be better off, and you're going to be able to trade this market frequently, even in this type of environment. All right. So that's going to be it, everyone. Have a great day. I appreciate all you spending a little bit of time with me. Oh, and by the way, just as a quick reminder, let me put the slide up again for you. We have the resources on the website. I've mentioned this a couple of times last week, and please take advantage of this. If you're new to watching the Daily Bites, it's free. If you're new to the Chart of the Week, it's free. It's coming out on Wednesday this week. Options trading ebooks I have everywhere. Come to the website, click on the little QR code on your phone, and it'll take you to this page. Show you all the free resources that we have. Free. There's nothing much free in life these days, but everything that I have on this page here is free. It won't cost you a dime. And I promise you it will increase your education in terms of options trading and technical analysis and markets and trading in general. So come join and read some of the stuff. Again, there's no risk at all to hitting this page and reading up on some of this stuff. Zero risk at all, other than the only thing you're spending is your time. So I look forward to hearing from all of you guys. Thank you again for sharing a little bit of time with me this morning. Later tonight, don't forget, NCAA finals is going to be Michigan against Connecticut. Go Connecticut! In Indianapolis. That'll be later on tonight, Eastern, 8:30 or so Eastern time. So enjoy that, and I will see you guys all back on Thursday morning. We'll talk a little bit about, I think the Fed meeting minutes come out on Wednesday. We'll talk a little bit about the markets, anything else that comes up that we can discuss. So stay focused, everyone. Keep some puts on. Also, keep some cash and look for your opportunities. Thanks again. Bye.